Uranium friends checking in on the uranium space. It seems as though they're dropping like flies. All these great fundamental experts, all these great traders, everybody's leaving the space. I kind of like that, but we'll see. So URA, URNM, URNJ, and Nukz, right? NUKZ. So let's take a look at these bad boys. All right. So URA first, daily chart. Chopperama, right? There's nothing special, nothing bullish, and nothing bearish about this chart in this time frame right here. Okay, so it's just going sideways. It's low volume sideways chop after rebalancing and whatnot. So yeah, I could see why there's some frustration, especially because everybody might be looking at everything else ripping faces off, and that's basically what's happening, right? So, hey, newsflash: nobody cares about the uranium space. It's a very small space. It's not very tradable. The majority of the names are not on the higher exchanges, and even more so, even the ones that are, they don't even have great option chains, maybe except CCJ, UEC, NXE. You know, those guys got the option chains. I mean, URNM doesn't even have that good of an option chain. So the only ETF with a good option chain is URA. Rant over on that, by the way. So, but here you are, short-term chop, nothing crazy, just a little bit of a overthrow there, but into rejected once again at a key level. Now, if you followed me for any amount of time on videos or anything I've been saying, this white line is a very big level. So we're going to go out to the monthly, right? So the monthly chart, there is nothing bearish about the monthly chart at all. Okay. It is a very good monthly chart. So, you could say it's a cup and handle. The true technical analysts will say it's not because the right side breached already of this left side. Conceptually, it's still a cup and handle, but there's your key level where it's just constantly rejecting at 3169. It's the actual level. You see the constant rejections there. Okay. It needs to get over that. So this is basically what's going on here is that this is a failed breakout on this monthly chart. Um, it's not necessarily 100% confirmed as a failed breakout. Why? Because it hasn't taken out really this level here. So this is the key level for now on URA 2279. I know I've posted it. I've been posting it for a couple of years now. Everyone can protect their portfolio. You can buy long dated puts in URA. You can go out 1 to 2 years. It's a dirt cheap way to do it, and it protects you. Do what you want, of course, but there is a way to protect yourself if you want to be someone who's just going to hold through the pain. I don't understand that personally, but everybody has to do their own thing. So the monthly chart is absolutely fine as long as 2279 holds. That is the key level to hold for now, right? So, but even if you look at this monthly chart, I'm going to zoom in because what I do want you to see is that, well, it's a monthly inside bar. We're working on our second monthly inside bar. So the nature of an inside bar is that there's just going to be incessant chop. So what needs to happen is that it needs to either break bear or break bull. That's where we're at with this, right? So, and to break bull, it needs to get passed over the key level since the life of the stock. So that's what we're looking at on URA. It's just it's quite frankly that simple. So the daily, I hate when I do this. The daily, Jesus, I suck at this. I should be better at navigating, but I don't, and I probably never will be. But regardless of that, the daily. Again, you can see the nature of an inside bar. It's probably a weekly inside bar. Let me just look real quick. Yeah, weekly inside bar, close to making a bull break. Let's just see if it did it. What's this high? 29.35, 29.27. So it's right there. we could be getting a weekly bull break on uranium on URA in the next day or two, possibly, and that would set this weekly higher low. We'd be still continuing in the right direction, but this is really just truly chop-a-rama. Okay, so it's obvious, right? You don't. No one has to be some sort of expert technical analyst to know that this is becoming an important level right down here. That just to say $27, right? Because it's holding, 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 rejecting, rejection, holding, 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 right? So it goes all. This level goes all the way back to September of 2023. One would think that it has some significance, right? So it's holding. It's a good sign. It's also the volume profile. So I understand it's very choppy. I understand that. But the weekly, it's holding for now. It's holding. Okay, so URNM probably going to have a similar look, I would assume. But we'll take a quickie. URNM, a little bit different, right? Not holding. Okay, made new lows. So weaker, and it would make some sense. URNM is not going to get the larger amounts of money that come from larger accounts like your Segra Capitals of the world, perhaps, or your little hedge funds or family offices. Okay, the liquidity is not here for them. Larger money needs larger liquidity. That is rule number one. So maybe we're seeing some of you retail people getting out, right? So this was not a good situation here. I mean, that's just a fake out here into new lows, and it's never a good look. It's never a good look, in my opinion. So we need some recovery here. Monthly, that double bottom for URA is at the same level as URNM. Look how much closer we are here. So it pays to pay attention here, right? So we're trading well below the 200-day moving average. We've been doing that since June of 2024. So it's not the greatest look here, but you do have your little descending triangle fake line thing. I guess I could do that. Makes it look better, right? So, a word to the wise on these line drawing technical analysts out there. These lines are subject to the drawing person's interpretation. And something like this is subject to interpretation, right? Do I take this? Do I include this wick? Do I include that wick? Do I have enough solid candle touches? There's a lot to it. Just think of it along the lines of just being a general guide. I think that's the best way to look at it because there's going to be a lot of guys out there. I see them do it. Not only in this sector, I see them do it. Um, it just so happens that some of the TA guys in this sector are just say different. So regardless of that, the monthly this is a weaker chart than URA. So and this level is we could say it's coming into play. With URA, it's a bit further away. So I don't like the look of URNM here. Did we have a bear break yet on the monthly? What is this low? 39.12, 39.41. So it's holding. It's a monthly inside bar. It's holding. That's the best I can tell you. What does weekly just close up look like? So weekly is just downtrend, right? Even if you sit there and say high, low, lower high, lower low, lower high, double bottom, makes a new high, loses the downtrend, doesn't make it an uptrend, right? New low, lower high, lower low, lower high, lower low by pennies, maybe by $1, whatever it is, right? By 50 cents, dollar. So confirming the weekly downtrend and continuing, starting to see some follow through, right? This was a good setup, rejection, right? So regardless of that, URNM is much weaker than URA. So if you're ETF player, you want to be in URA. If you just want to decide between URNM and URA, URA is obviously stronger. So URNJ, it's going to be the juniors. It's probably going to be a little bit weaker. We're stuck between these value areas. These boxes are defining that because of all this action in the early part of its life. This is plenty of action up here. So, and one can contend that this is a value area here. It's really starting to build up, and we could say, like, you could probably move this box. We're going to leave it the way it is for now. For my own personal charting, but yes, weekly downtrend, continuing, right? High, low, lower high, lower low, lower high, building a base. That's kind of what URNJ is doing. Daily is probably nothing special, right? So it's a chop fest. It's kind of the same as URNM, although URNM did flush out that level. URNJ did not. There was some buying holding it up. So the bulls are defending right now on URNJ. They are not defending on URNN. Um, I don't know why. I can't answer that. So um, broken ETF, I don't know. Maybe URNJ because it doesn't have the same exposure. URNM and URA have basically the same exposure. Could be. All right. So that's the deal. So URNJ is holding. Let's see how it plays. But there's nothing great about this yet. So get us over 2037 first, right? And then we have to deal with that level. But not looking fantastic. Nukz, the new kid on the block. Not a lot of price data, but we do know these nuclear power plant builders are getting a lot more attention. So the question would be why, right? And then the next question would be that anybody playing the uranium quote unquote space, maybe they shouldn't just be playing the uranium space. They should be playing the nuclear space. And if you're playing the nuclear space, then you should be looking at these stocks. Now I know there are some newsletter writers out there that are calling these meme stocks. Well, you know what that tells me? They have no idea what they're doing, or they just don't know how, or they're just trying to protect their proprietary uranium miners are going to the moon. Okay, you can decide what you think about that on your own. All I can tell you is that Nukes is the most bullish ETF in the space. And it doesn't look like there's anything stopping it at the moment. We're coming up into a resistance, but it had its blue sky breakout, came back to retest. Now it's going back to test up the breakout again. So again, not a lot of price data here, but for all intents and purposes right now, the key to hold is $40. Got to hold $40. You got the volume profile here supporting it. It's doing its weekly 12 EMA ride that we all know and love, right? So just stick with it there, and this has got Aqua in it, it's got SMR, it's got NNE, those stocks that the experts have no idea how to trade. But look, it's a new part of the entire nuclear theme that's tradable. It's on the big boards. They have option chains. This is why these names and the names within this ETF are getting the action. And there's a story to be told there, right? So the technology of these plants is changing, and it's rapidly progressing. And there's a lot of big names and money behind this stuff. Pay attention. It's just that simple. Yeah, because Sam Altman has Oklo, you're not going to do it because, oh, he's shady. Well, that's stupid. Sam Altman knows how to raise money. Sam Altman knows how to get people on board. He knows how to get institutional money. He knows how to do that. Pay attention. The money is here for now. The key, and I would say that you can start doing some ratios, maybe not yet, because this is early, but the key is when this draws down, do we see the miners or the physical uranium to start to make a move? You know, do we have that inverse correlation? That's what we're going to be looking for because you want this money. We want all these people that have never even thought about global atomic and have no clue what it is and wouldn't touch it for that matter, because just jurisdictional risk alone, and it's a stinky penny stock. They don't know anything about the miners or any of them. They don't know about Encore. They don't know anything. They might know CCJ and UEC. Um, Maybe they're going to say, "Hey, I need to run. I want to keep in the nuclear space. I like the theme. Elon Musk is in on it. Bill Gates is in on it. Sam Altman's in on it. Jeff Bezos is in on it. Mark Zuckerberg's in on it. I want to be on it too. Where's the value play? Well, the value play for these guys after they've exhausted this move should be, if they decide to stay, put somewhat money in the space, is going to be into the uranium miners and the physical trusts and maybe the actual metal itself. That's what we're looking for. That's what I'm looking for. I want to see the rotation if it occurs. They actually paid a dividend, huh? The 4 cents. So that's the deal with the ETFs, man. There's obvious. It is obvious. There's some huge differences, right? So it's URA and it's Nukz. Those are the spots. There's another one that's out there. It's NLR. I just always viewed it as some bad liquidity on that thing. Nukz is better. So NLR has broken out actually, and it's back testing, right? So, but the liquidity here is rough. So take that with a grain of salt with NLR, but and there's more operators. Not This is not a pure mining play either. Again, I just went over this with precious metals. The mining companies, the business itself, it's a very difficult business. It's even worse for uranium than it is for precious metals. So it's got to be something special. But you can look at NLR as well. I like Nukes better because Nukes has better liquidity, believe it or not, even at this young age. Yeah. So this is volume ramp up to pay attention to. There's nothing, this is what bulls like to see, right? So this is just dead in the water forever. Now it's starting to get a little action. Has its little breakout, has its back test. Not horrible either. So I would be keeping an eye on these things. What we really want to see is we want to see the rotation back into the miners. We want this money. We want this nukes money. I call it nukes money. We want that money to stay in the sector. Of course, some is going to leave, but maybe someone has so much profit they go, you know what? Now that I'm looking at these miners and the uranium itself, it could be value there, especially if this nuclear thing goes right. It's a 10-year play. When I entered the nuclear space in 2021, I looked at it as a 10-year play. 4 years into that play, I could easily just leave and I could always come back. That still doesn't mean that I'm not playing it. It's just that I'm not positioned, and that's fine with me. But that's the deal. It's clear as day, what the stronger ETFs are, and to me, I know why it is. It's liquidity and option chains. I keep trying to pound that out to the people in the sector, but you do what you got to do. Over and out.